Hello, welcome to my channel. When you sell your property for more than cost, you have a capital gain. Half of the capital gain is taxable at your marginal tax rate. There are some exceptions, such as the principal residence exemption. If you meet the conditions set by the CRA, you can designate your property as your principal residence and eliminate or reduce the capital gain. First, the types of property that can qualify as a principal residence is defined in Section 54 of the Income Tax Act. The first one is a housing unit. According to the CRA, many types of property can be considered a housing unit, such as a house, an apartment, a condo unit, a cottage. Principal residence could also be a leasehold interest in a housing unit, or a share of the capital stock of a cooperative housing corporation acquired for the purpose of obtaining the right to live in a housing unit owned by the corporation. To designate a property as your principal residence, you must own the property yourself or jointly with another person. You, your current or former spouse or common law partner, or any of your children must live in it at some time during the year. Finally, you must designate the property as your principal residence. The CRA does not specify the length of time someone must live in a property in order to designate it as principal residence. According to the CRA, even a short period of time can qualify, depending on the case. Also, your principal residence does not have to be the place where you live all the time. Vacation property or seasonal residence can also qualify as long as you live there at some time during the year. If the main reason for owning the property is to generate income, the property will not be considered to be ordinarily inhabited by the taxpayer. There are some exceptions. If you are only earning incidental income from your property, you are not considered to own the property mainly for the purpose of generating income. If the main reason for owning the property is to earn income, and you rent the property to your child, then you can still designate the property as your principal residence. For each year, a family unit can only designate one property as principal residence. A family unit includes the taxpayer, spouse or common law partner, and single children under 18 years of age. For tax years prior to 1982, each spouse could designate a separate property as principal residence as long as the property wasn't jointly owned. According to the CRA, a property located outside Canada can qualify as a principal residence if the requirements for principal residence are met. For example, you have to live in it at some time during the year. Foreign vacation property or seasonal residence can also qualify. If you designate your property as your principal residence, you can eliminate or reduce a capital gain on the disposition or deemed disposition of the property. The exemption is limited to the building and half a hectare of land. The exemption is calculated as capital gain times 1 plus the number of years the property was designated as principal residence and during which the taxpayer was Canadian resident, divided by the number of years the property was owned. It is normal for people to sell a principal residence and move into another one in the same year. The 1 plus in the formula ensure that when you move, both your old home and your new home will be treated as principal residence in the year of the move. The 1 plus only applies when the taxpayer was Canadian resident during the year in which they acquired the property. While non-residents can designate a property as principal residence, the calculation of the principal residence exemption is limited to the number of years during which the taxpayer was Canadian resident. This means even if a property in Canada owned by a non-resident can qualify as principal residence, the non-resident cannot use the principal residence exemption to eliminate the capital gain on the disposition of the property. In the first scenario, if the property was your principal residence for every year you owned it, and you have been a Canadian resident for all the years the property was owned, you do not have to pay tax on the gain. In the second scenario, if you own multiple properties, you won't be able to eliminate all the capital gains, as you can only designate one property as principal residence for each tax year. In order to maximize the principal residence exemption, you should designate the property with the highest capital gain per year as your principal residence for the number of years owned minus 1. Why minus 1? It is because you'll be able to take advantage of the 1 plus in the PRE formula. If your situation is very complex, you should consult with a professional. In some situations, the sale of property may result in business income rather than capital gain, and business income cannot be exempt using the principal residence exemption. For example, buying and selling properties for the purpose of earning income. Builders who built and occupied a property before selling it, and short-term ownership. Prior to 2016, the CRA did not require any reporting related to the sale of a principal residence if the property was principal residence for every year owned. For 2016 and subsequent tax years, the CRA requires the sale of principal residence to be reported on Schedule 3 of T1 Personal Tax Return in order to improve compliance and administration. In addition, for 2017 and later tax years, the CRA also requires Form T2091 for all principal residence disposals. It is very important to comply with the requirements, as there is a late filing penalty of $100 per month, up to a maximum of $8,000. In addition, if you do not report your sale of principal residence, the CRA can deny your principal residence exemption. Thank you so much for watching. For my next video, I will be interviewing a professional realtor to get her expertise about buying a home in Canada.